It's been a long time coming for this company, and it's finally having its aha moment. Hey everyone, what we're going to do in today's video is go over top 10 stocks to buy for February. Now this is a little different than what we usually do. What we're going to start doing here is we're going to come up with a list, and then if needed during the month of February, we're going to talk about them in the normal Saturday top 10 list that we do. At the beginning of every month, what I'm going to do is I'm going to do a video segment where I showcase 10. And then as they progress during the month, we're going to talk about them while I throw in other ideas that are more short term. But this will allow people to set up a little bit better going forward. So, this is a work in progress as we all try to learn. But the very first one I want to focus on is BPT. And this is a great example of why I want to continue to monitor these and talk about them. Now, let's get rid of all these indicators for a moment. You'll remember this one from about a month ago. We talked about it in one of the top 10 videos from 480, and we never really had a way to consistently keep monitoring to them. I think doing this is going to be extremely helpful as we add more during the current month and for the rest of the year. So what we're going to focus on is how we acted at this 649, how we reacted at this 462. We're breaking out here. Now you see these levels? We're going to go to multiple time frames. This is a monthly. Now, if you look at the monthly, you see where you're at. You'll see exactly where you stopped, right near that 1075, right? 1658 is what you're looking for and where you're looking for this to get to. Can it get there? Yes, it can. It can get there. I'll explain why. First and foremost, this company is a royalty trust. So there is a province in Alaska called the Prudhoe Bay, and all the royalties from that get divided up. 16.5% of those royalties go to this company. If you factor in that their earnings growth is between 200 to 300%, quarter versus quarter, right? The past 2 quarters, and all those dividends have to be given to the shareholders. If you think about that and walk through that, you'll notice very clearly that the dividend's going to increase, and that's exactly what it's done. It has increased. If you focus on the increase, the previous quarter before the last one was 6 cents. The one before that was 2 cents. This dividend that just came out is 60 cents. So the dividend has increased dramatically as earnings per share has gone up. Now, what does that mean for us? That means that when somebody owned it here, when somebody owned it and it went ex-dividend, which was right here, and you can see that little drop, they got a 10% quarter dividend. So for owning it for 3 months, they got 10%. Well, the annualized dividend then is no longer the 7% that it's showing. It's actually increased exponentially. And that's what people are starting to realize here. That's what makes this so attractive. Now, what we're going to do is we're going to start talking about ranges that you need to look at. So the first range you're going to want to watch, see if you get over this 1082 level. If you don't get over 1082, watch this next level, 950. If you get between there, see if you can get back down to the 6.5. The goal here is to keep monitoring these names, get in them, and stay in them. But this is definitely one you're going to want to watch for February. Next up is Apple. Now, why Apple? Apple's earnings were outstanding. We're not even going to rehash it again. You can look it up if you want to, but for time's sake, we're going to move along. What we're going to focus on Apple is simply technicals, and we're going to give you a couple levels to look at here. So it's important to understand that you're holding this 50-day. You came down below it. Let's zoom in on this, and let's open this up. And what you'll see how you held right there? Now your 8's crossing up, your 8's crossing your 21 up, your 8's crossing your 50 up. We got to get back above that 5, right? But the whole market's not above that 5. And what we're forming is a flag here. So now if we get rid of all this, we can see our flag. Now, what we've done is we've broken this downward trend line. Now you can see exactly what the issue is. The issue is the higher high. Remember, when you break a downward trend line, you need to get over the previous high to the left in order for confirm the move. So it's not really that staggering that we stopped right there, right? So what we're looking to do before we would enter this is 176.62. So you're looking for 176.62, and then I think you're going to challenge these highs. Now, where could we go? This is fairly easy to look at without getting to earnings and everything. All we're going to do is just look at this fundamentally and say, okay, well, where's the channel? Because that channel will give us an interesting spot on where we could get to, right? It'll give us some reading on where we could get to. So let's just use this because it hits several more times than this wick does. And just off the rip, this could get us up to the 193 level if it went today. You're looking at probably a $200 stock by the end of the year. But if this gets moving, companies that are going to benefit the most are companies that have already had outstanding earnings that institutions feel comfortable owning. Next up is Snapchat. Why? Their earnings were absolutely phenomenal. They crushed it across the board. So you had a 20% growth year over year where Facebook came in at 4%. The earnings which was last night. So let's just walk through that for a minute so you can see this. At the time of filming this, it was last night. What you're going to see is this is going to be your next level. So one area you're going to have to want to watch is 42.66. But what are we looking for to get into it? This is fairly simple. If I get up and over this, I would try to get in this trade to see if we challenge this and see if we get through it. Why do I say that? Well, a couple things. First and foremost, let's get rid of the 5 and the 8 for a moment, and then we'll be able to get into this. What you're going to see is you're going to see how these 50 has not been violated since you got through it here. The 21, the same, right? Only once. What's happened? What happened last night? And what happened today? Now, if we take out the pre and post data, I left it in for a reason, but see how you're sitting right on the 21 day and respecting the 21 day? So now you're wedged in here. This clearly shows support. More importantly, if you just sit here and take a look at the volume that came in today, this is institutional buying. It's very clear that that's what's going on here. If you look at this on a relative volume basis, relative volume is a great tool to kind of get you an understanding of how much real demand is out there on average. You're seeing 8.5 times normal average daily volume. The reason for this is because the company stated that they were going to go EBITDA positive. If you go through their last 5 earnings quarter, 125% growth, 200% growth, 113, 211. They're knocking the cover off the ball. It was 144% growth this quarter, and they're talking about being EBITDA positive. It's been a long time coming for this company, and it's finally having its aha moment. I would refer to this as an aha moment, meaning what transpired here is very similar. When Tesla all of a sudden started having their cars come out of production and working, when you saw Facebook realize that they should go to a mobile platform, when you saw Amazon in 2015 finally turn EBITDA positive and it was $462 and it closed today up 5-fold that. I think this is setting up for a massive move. Now, you might not have the right temperament for it right now is the best word to use because of what's going on, but this growth is just outstanding and it's just simply not going to go away. So we want to try and get up and in this before we break this, because if you get over that 50, you're going to just absolutely run. Now let's just focus on what's going on here. This is the monthly, and yes, we just started the new month, but I think it's worth noting in January, you went right to the 50 month and you held. And I think that's important to note. So there's a lot of decline here and there's a lot of work for this to do, and it has plenty of time, but I would not be surprised to see this at the end of the month, to see this back to this level, to see that to that 48 level. Now, the other area I would look at purchasing it is if we get another shot at this 21 down here, this 21 day. That's another area I would look at. And roughly, I can give you that number where it is right now, but I would use it as a guide. So roughly, you're looking at 34.10 is the other area that you could look at. But in between here, I would want to start accumulating it and have a position in this for a longer term, because I think that this is really something to watch. Google. Why is Google on the list? Google's on the list not just because they came out and their earnings per share every quarter or double or triple digits, and the company is absolutely massive. I mean, the sheer size of this company at $900 billion, and we're sitting here talking about 45% earnings growth. It's staggering. What's most appealing is the volume that's starting to come into it and how this is crossing up. Why is that happening? They announced a 20-to-1 split. When this market settles down, and eventually it will settle down, when we start seeing that, people are going to start accumulating this because they know you go out there and they buy 50 shares on retail and then it moves, right? And now you own 1,000 shares. Very similar to if you go and take a look at Tesla. Tesla was a $1,500 stock before that split, but everybody wanted to own it and then they went out and bought it. So that's going to be a much larger driver here than people are thinking. It did the same thing with NVIDIA. Same exact thing is going to happen here. Notice how you're holding this level. What I would be using is I would simply use this and make sure that I got above that 28.90 before I got involved. That's what I would use. Now, whether you're using GOOG or GOOGL, it doesn't really matter to me. But what you're looking for is to get up and in this, and then frankly, I would try and stay in it if you can buy right going into that split, because that's going to be big. It's going to be a lot bigger than people think it is. You have to realize people have been waiting for the companies like Amazon, Tesla, Google to split for years. People have been waiting for this to buy shares. So it's really it's a much bigger deal than people are talking about. And I think this is pretty pivotal to understand where you're at in the pecking order. Somebody needs to tell them that there's a correction going on in the market because the stock's hardly down. And the reason behind that is because of the huge earnings growth. You'll notice in this video tonight that you're seeing more fundamental research. And the reason for that is your comments. So it's really important that you comment on these videos, share them, and like them. And the reason for that is it really helps me. The more people that see this, the more comments I get. The more comments I get, the better the content I can make. The goal is to create content so that people can learn. And if we want to start leaning more fundamental, those comments have gotten me to lean more fundamental. So this wouldn't be a top 10 list for buys without me coming out with a short, right? So we have a short, it's Amazon. I'm going to walk you through why. First and foremost, we're just going to talk about this technically. We're going to talk about this bounce today from this level, right? And this is what you did last night. Let's just put that in so we can see it. And you can see that bounce pretty clearly, right? Now, let's get rid of that. And we're going to get rid of this for a moment. You open down, everybody was short. You come in, you gap us up. It is completely a trap, right? But what kind of trap is this? Well, if you know your chart patterns, and I strongly recommend that you learn your chart patterns as well as your candlesticks, you could see pretty clearly what's going on here. Here's your trend. Now, let's put these back in. And let's get rid of everything but this 50. Now, where does this trend take you to? Right to that trend line. The trend line you have not been able to break for months. This is a textbook bull trap. Now, in regards to their earnings, the only reason that they beat on the earnings front, the only reason that they beat at all was because they sold a stake in an investment they made in Rivian, and they locked in something like 10 or 11 billion dollars. Had they not done that, they would have missed earnings. They guided lower for first quarter. So the enthusiasm that we're seeing for this, for me, I don't get it. Now, technically, I expect this to roll right back down. I think this is going to turn into one big H. But with the short, where am I wrong? I'm wrong if I close over this wedge line. I'm wrong if I close over that 50-day simple moving average. So if this is something where you're looking at buying puts on it, or you're looking at shorting along with me, I'm currently short this, you would find yourself in a position that you would realize that you're wrong at that level. And that's what you have to know. You have to know this level because the level is going to move as it drops down, right? Which is nice because it's like a trailing stop. But based upon this doji and what I'm expecting, you just simply got a bunch of people trapped today. And I fully expect this to trade itself down. I'm not saying that Amazon's going away, but you have this hanging position here. And I see no reason why this can't simply roll right back down and retest these lows. So I'm looking for about a 10% move on Amazon to the downside. I don't think it's unrealistic. You know, if they came out and they beat and they crushed on all metrics, and AWS, yes, that's doing great. Why did they miss the revenue projections for the year if everything's so great? The Christmas season, that's their season. And that's when they need to shine. And they didn't at all. So that is somewhat concerning. Now, you can always sit there and look at the RSI and say, yes, we're breaking back over 50. And of course, with this kind of move, you are. Again, I could be wrong, but at this particular spot, I think it makes a lot of sense to consider putting a short on right here. HES, Hess Corporation. For those that don't know, exploration, production, transportation, marketing of oil, gas worldwide, they're huge. Now, what does this mean for us? Well, very simply, a company like this, it's a $30 billion company. I say they're huge. There's obviously bigger one. What's interesting about this one is the diversification. Also, we just came out with earnings. Now, if you look at the past 4 quarters, you have 237% earnings growth, 123% earnings growth, 139 and 240 on the last quarter. What's interesting about the last quarter is look at this volume curve. Volume curves are extremely important. We're using a 20-day SMA line. And you can see how it's curving up. And look at all this volume that's coming in here. People are saying, I need to buy this. Now, we're not ready for prime time yet. Why? Because you can see this upper channel. But we can see what's going on with the XLE. And we're aware of the other names in the XLE. If you are not a subscriber to the newsletter, just go to the description or the end of this video and click on the logo. And you can sign up and get the free version and follow along with us as we go through these stocks during the week. But what's also important is if we flip this upper channel, okay, that becomes your buy. So what you're really looking for here on this particular trade is this, 96.75. You don't want to go near this. You don't want to be buying this on dips. Some of the others, I'm going to give you examples of where you should be stepping up to the plate. This is very, very clear. Until you get over 96.75, there's no reason to go near this. Now, focus on what's going on here, because I am, and I find it very interesting. Comes down, retests, can't break. Look at this. Bonk. Tries again. Bonk. Now, these are monthlies. Has to make a decision, right? You can see this range here. I'll draw it, but hopefully you can see this. And you can see this battle that was going on. Here's your battle. See how failed. Resistances become supports. They flip. We just flipped one. We're setting up again. Now the month's not over. I get that. But if we break a downward trend line like we just showed you on Amazon, you must complete. How do you complete? Just like Apple, right? We needed Apple to go. We need to get to the top of this. This is our first goal. By getting to there, we would confirm that the downward trend line is broken. You remember these kinds of massive downward trend lines when we looked at Ford around 12 bucks? What we're looking for is just to get up to here, 104.5. Now, it's not the best trade in the world, but if you can get up and in, that's what you're trying to do. We can get up there and get about 9% and then see how we act here. Now, if we get through that, this becomes the target, and now we're looking at 136 as the target price. That becomes very interesting. This volume is telling me that I have a chance to break this. For those that don't remember, when you break an upper channel, you can go parabolic. I would not be surprised to start seeing more and more froth come into, or froth in and of itself come into energy. I'm already starting to see it in some of the subpar MLP names. Now, Halliburton is in the same space. Different, but it's still an energy. Okay, you're looking at a company that really supplies drilling services for gas and oil. Okay, that's really what they do. So more of a backbone kind of company. Now, this is a very simple trade. We've already gone through earnings, but all you're doing is looking at closing over 32.13. This is a textbook high tight flag. Look at your volume coming in and increasing. I don't even need these, but I can put them in. I use simple moving averages. You should use what you're comfortable with. We're above the 8. We're above the 5. What's not above the 5 and the 8? The SPY and the Qs. What's that mean? That we have high relative strength here, right? If we have stronger relative strength in the market, we should be interested in that. Go take a look at this on a monthly. Look at this, right? I should be able to get up and in and up to here. Gets me 4 or 5 points or 10%, and then we can see what happens. But it gets me up and in for this trade, which is what we're trying to do. Energy, this move is not going away. When Russia and Ukraine finally figure out what they're doing, you might see it dissipate a little bit, but the demand for energy as things open up is just going to be absolutely staggering. And I think that they're going to benefit greatly from it. I really like the space. I can't stress it enough. And I do think that you're going to break the downward trend line on this. So Cedar Fair, there's been a lot of talk about this one. Now, why has there been a lot of talk? Well, first and foremost, they rebuffed an offer to be bought by Six Flags. And this happened a while ago where Six Flags made them an offer and they decided to go against it. It was stock and cash at the time. Now, we have a new offer on the table from SeaWorld. What's different about this offer? It's at $3.4 billion. Well, they always tell you the first offer that you're going to get is usually not the best offer and you can renegotiate. I think that's exactly where this is going. And what's telling me that? I'm going to give you something really simple to look at. If you sit here and focus, this is when the news came out. This is where we closed. This is how we're trading up. Look how we're getting bought every single day. Okay. So if I was the owner of this company and I wanted to get out of the business, cash sounds a lot better to me than anything. But do I really want to sell the company 10% less than, actually 12% less than I was just offered? Probably not. So the chances of them coming out and having to go up to about $70 seems somewhat realistic. I think they came in and lowballed them, and I think you're going to see something right around this level where this happens. Now, could this not go through? Yes, this could absolutely not go through. I don't foresee that with the way that this is trading, especially if you take a look at what you're seeing on the volume side. There's way too much volume coming in this. And for me, I think it makes a lot of sense. I would be looking at doing this at market and holding it while this sorts itself out if I was interested, because you don't have much downside. You're going to go to 60. It just depends on when. But if you could get a pullback on some like jolt of news down to the 56.39 level, that would be of interest. Now, these can always blow up. They can always not work. But I do think that it makes a lot of sense. You know, if you wanted to come out and you wanted an exit strategy out of your company and to get out of this business, let's get rid of this line. This one makes a lot of sense. And so I'm a big believer that this is probably going to get done. And we're looking at this getting done probably for $70, not the $60 that they're talking about. And I think it's going to be all cash. Make sure you subscribe to the channel and click all notifications. For those that do subscribe and click all notifications, you get private videos that I put out during the day. Those videos can be extremely helpful. Today's video showed why 3200 on Amazon may be a problem. And we can obviously see how that played out, right? So it became a pretty big issue for those that were there, and it actually gave us a really great place to start our short position. And I did. We're up about 50 points on that already. So it's definitely worth your time. Now, let's get back to it. CME. Now, why are we putting this one in? Well, this is the one that we're putting in that is coming up on earnings on the 9th, but we're putting it in. Why? Because we're looking at a month. We're not looking out a week. So if I was going to exclude everything that comes out with earnings while we're doing this, we're going to miss a lot of stocks. So we're going to have to figure out, we're going to have to talk about how would we do this? Well, this is fairly simple. Let's get off all these averages and let's just answer some simple questions. Are we above the 5-day? Yes, we are. Are we above the 8? Yes, we are. Okay. And we know that we're above the 200, the 21, and the 50, so we don't even need to put them in. Now, what's next? Let's look at the relative strength of what's going on here. I've got strong relative strength. I'm breaking out ahead of earnings. Very clearly, if you want to buy this before earnings, that's entirely up to you. What I'm going to do is just give you levels. Because if you look at these levels and then when the news comes out, then you can act on it because that's what's important. Now, if you go through this historically and just look at when the earnings come out, it's up or down a little bit. Here we got hit, but very rarely does that happen. Now, what I think is going on with the CME, which is the Chicago Mercantile Exchange, I think that you're seeing huge demand for hedging. And I think that that's based upon what's going on with energy, basic materials, things like steel. I think you're seeing an enormous amount of hedging going on out there right now. And what that does is that drives volume. If volume is driven to the exchange, they benefit greatly from that. And I think that's exactly what this is telling us. Now, go take a look at this on a monthly. We've never done this, right? So let's go through this and let me just pull all this data back so we're clear that this is the most data you could have. Okay, how many stocks are breaking out of monthly cup and handles, right? And you could see this cup and handle, but let's just show you. Here's your cup and here's your handle, right? Put that in real quick so you can see it. I'm going to have to draw that better than that. So there's your little handle, and now you're broken out of it. How many stocks are breaking out right now? I mean, unless you're in oil, very few. So I like this a lot. And this is definitely one that would be on my radar. I'm not going to be buying it ahead of earnings. My hope is that earnings aren't that stellar for this move, and it comes back down to this level, this 232.63. And go from there. If you wanted to buy before then, just look at the 248.17 level. As we just kind of talked about what's going on out there with alloys and basic materials, you're seeing these types of companies break out, right? Allegheny Technologies, really what they do is specialty alloys for construction, aerospace, automotive, electrical. That's their niche. Now, why is this interesting? Because earnings are behind us and they absolutely crushed. Lost money, made a little money, made a lot of money, right? 25 cents. That's what you want to see. You want to see changes like that. And that gets us over 178% year over year earnings growth. That's a good thing. You have this huge cup right here and this handle again, right here. 5 and the 8 are in. Now we can put these in, but we should be able to have an understanding of where these are at, right? Because we know what they are before we put them in. So we know that where we're going to be. But you can always put them in and take a look. Now, what's pertinent about this one for me are two things. I want to know how much volume is up in this area, and I want to know how this relative volume ranks before I get involved. So the first thing we're going to do is just click relative volume and go, okay, well, even though the spike looks great, we've been increasing, so it's not as great as we thought it was, right? But you're still 4x average volume on the breakout. Now, the next thing we want to focus on is volume by price. Why? Because this will show me as I go higher if we're huge buyers up here. Now, point of control, which shows where the largest holders are, is here. And then the average of this entire time frame, which goes from here, is telling us that we don't have to worry about VWAP either. So this is pretty much a win-win all the way around. What does that mean for us? Well, it gives us a chance here to get in. If you see these kind of 3-bar patterns, what you want to do is you just want to see them break. Now, when will I know that this has negated? This has negated if we break through this. If you get through that to the downside, 2066, you're going to want to get out of it. 2307, clear 2307, and then we're going to see if we can test this level up here, right? And then that gets us to 2508. Now, what does that do for us? Glad you asked. Look at this chart and look where you've been. Let's get rid of all these indicators. Let's just draw some very simple trend lines here. This is a minor one. This was a major one. All right. So what does that mean for me? Well, that means that if I break this, we're probably going to the top of this, right? Now, when we break this, then we go to the next level, which would be up here, which would be 30. And then they could continually walk us up on this monthly chart. You're looking at a longer time frame, but the possibility of making good money on this is there. Now, when these companies move the way they're moving right now, this is a secular change, meaning a multi-year change. It's not something that slows itself down. It's not something that's going to get going and then all of a sudden the rug's going to get pulled out. That's not this kind of company. So watch this 2307 level.